Why you should aim for cash flow and how to do it. Hi, I'm Josh Horn with Horn Valuation. I help business owners and attorneys with business valuation and building business value. Are you in pain right now because of cash? If I can show you a simple and powerful tool to solve this problem right now today, would you be interested? Because this is what I'm going to show you today. I'm going to show you in a short segment how to do your cash flow planning. Without question, big businesses, small businesses, every business in between that I've been involved in, this has been the biggest Achilles heel. The thing that businesses stub their toe on, that when they don't get a handle on this, it can be the difference between success and failure. Bankruptcy, literally. And so you have to get a handle on this. That's what I'm going to give you today. It's going to be simple, short, powerful, a tool you can use every day. You have to maintain the discipline though. Cash is like oxygen for a business. And you also have to have the ability to see what's coming for your business, what's coming around the corner. So let's take a look at ABC Company and what you can do for your company. What I'd like you to do is take a look at last week, just 1 week, what happened, and take a look at the inflows and the outflows and track those. So let's blow this spreadsheet up and see what ABC Company looked like. Your company might look very much different. But what you want to do is get some historical perspective on how to project cash flow going down the road. We started with a beginning cash balance. We have to have a beginning one. All the orange boxes are the inputs. The rest of it is largely formulas. We're getting a sense of what is happening. You can do this for your business. What happened last week? These are the biggest ones that I see most often. Accounts receivable, maybe some borrowings on lines of credit as inflows. Going down the spreadsheet, outflows, payroll likely, AP, which will probably be check runs and or ACH, rent payments, maybe a term loan, payments on line of credit. You may have other categories. You can blow this up and use it however you want. And I'll put this on hornvaluation.com/blog. Use it, figure out how to adapt it to your particular situation. At the bottom, what I built in is a check where you can use the cash that is on your balance sheet as a double check here to make sure you're tracking this right. So that is a hard-coded input. In this case, it's row 31. For the cash that's on your balance sheet. Now this is going to force you to do several things. And so let's talk about some of those things it's going to force you to do by getting this down on paper the last 5 days, 7 days, whatever you want to do. Then you're going to project future weeks, which is where this really gets powerful. What are some of the things you're going to be able to see here and proactively attack in your business because you're doing this? Let's blow this up and take a look at it. You're going to know where cash is going. You're going to be able to make quicker decisions. Keep your financial statements up to date and clean. This is going to force you to make your postings every single day. Keep your accounts receivable up to date. Know who's behind. How about your AP? You're going to keep that up to date and know who you must pay. I highly recommend that you're using computer software for your accounting system. I hope you're not using note cards or green bar paper. Some still are. You really need a heads-up display to tell you who you owe and who owes you. And by doing that, you can incorporate this into this cash flow spreadsheet in seconds. What adjustments are you going to make? And when you get the hang of it, hopefully you can drop this down to less frequently. I've got the projected out as a weekly projection. You may want to use daily until you really get the hang of it. That's your call. For the projected down at the bottom, I've got this row for notes on variance. What I would encourage you to do is when you see that something did not go as planned, put a note down here and remind yourself, hey, I had an expense that I didn't plan for, or I got income that I didn't plan for. So as you're going down the road, you're going to put in actual, replace the projected with actual, and then put some notes down at the bottom. So notice that ABC company here in this tab is cash flow positive. And I've built some formatting into this sheet to give you a heads up in the event that this goes negative. This ABC company, or a different company, they've got trouble ahead. And notice that in the week beginning May 25th, they've gone negative. So what you want to do is plan before you get there. And remember, there are only really 4 levers you can pull in your business, some faster than others. You can increase your sales, you can reduce your expenses. Both those are fairly slow solutions to your problem. You can borrow more money if you haven't borrowed all that you can, or you can put capital in if you have it. Now, the last 2 are a little quicker, but they could be more painful because you want to watch your debt and you may not have the personal capital to put in at this point. Notice I have a line in here for SBA PPP loan funds. If you were eligible, I hope you have that and hope you're accounting for that here as well, because that could be an impactful row on this sheet to monitor your cash flow. I'll put a blank one out there for your use again on hornvaluation.com/blog. Give me a call or send me an email if you have any questions on how to use this or how to adapt it to your specific situation. This may not fit your specific situation depending on the type of business that you have, but it will give you a foundation to start doing cash flow and being less fearful about what is coming. Get ahead of this and start to have huge impact on how you can feel more confident about what's coming, increasing your cash flows, increasing the value of your business. This is Josh Horn, CPA of Horn Valuation. Have a great day. Bye.